Hello, guys. Welcome back to another lesson on risk reward and finances and regards to forex, right? So basically, I know you guys are the best, and I know you guys have been practicing and practicing and practicing, and I know that you are probably very good in what you guys are doing. You know what? You've figured out a lot of confluences. You understand the Fibonacci. You've been practicing with the Fibonacci. You have seen head and shoulders. You understand structure, price action, and literally, which will be candlesticks analysis. Support and resistance, and trend lines, right? So the next thing, which is the most important thing above everything, is definitely the risk reward strategy, right? What is your risk reward strategy? You need risk reward in order for you to succeed in trading, right? If you don't have good risk reward, you would definitely gonna lose money. So as you can see on the charts here, we have like different type of risk reward. We have 1-to-1 risk reward, 1-to-2, 1-to-3, and 1-to-4. Okay, each what it means is literally the red means like how much are you willing to risk, yeah, in order to gain X amount of money. All right, this is what it means. Like the this is the red line, as the red thing represents like the risk you want to take in terms of how much you're willing to lose, and the green represents how much you're willing to gain. Okay, so 1-to-1 is a risk reward, 1-to-2, 1-to-3, 1-to-4. Okay, so if you go down, if you like, as I can see, it's like winners means if you win 1%, 1-to-1 risk reward means winning one, willing to lose 100, like winning $100, willing to lose $100, winning sorry, actually it's actually other way around, sorry. Willing to win $200. I don't know why I did it wrong. $200, okay, and willing to lose one, okay. That's just what it is, okay. So you're willing to win $200, okay, and then lose 200. I don't know why I did it like everything like a little bit complicated, but yeah. So basically, you are willing to win $300. Yeah, 1-to-3, 1-to-4. All right. So sorry for the confusion. I need to do a little bit better. So I'll just give like another example. So in actuality, every time when we have one is 1-to-1, 1-to-2, 1-to-3, 1-to-4. Okay, I hope you understand it. Okay, if you win, if you're willing to lose $100, you want to make 100 back. If you're willing to lose $100, you want to make 200 back. Okay, that's 1-to-2. If you're willing to lose $100, you want to make $300 back. Okay, that is the 1-to-3. If you're willing to lose $100, you want to make 400 back. Okay, that's how it works. Okay, the best thing about risk reward is like the higher the risk reward, the better chance of you succeeding in trading, because you then are able to allow yourself to have more losses. So if you have a 1-to-1 risk reward, literally means you have to be over 70% or 80% right constantly in order actually to make your profit, and that is very hard. Yeah, if you're a scalper, if you're a swing trader or day trader, it is very hard to make that happen. So even if you do 1-to-2 risk reward, it's also gonna be very hard to make sure that you can make the money back. Okay, but the best risk reward will be always 1-to-3 to 1-to-4, 1-to-5. Right, everything from 1-to-3 upwards. Sometimes 1-to-2 depends on the setups and how you're gonna trade. But 1-to-3 is always a good way of making money. 1-to-3 is always something where you can be consistent in trading, because the key in trading is consistency. That means if you lose, you always need to make sure that you lose less than you actually make. Yeah, so we give one example. So for instance, one of the examples is here, okay? So let us say you lose 60% of all the trades, yeah, and you only win 40. And your risk reward is 1-to-3, okay? So let us say you lose 60% of your trades, boom, okay, and your risk reward is 1-to-3, bam, okay, 1-to-3, okay, and you lose 6 trades. Okay, so now let's see what happens. So basically, if you lose 60% and win 40, you lose 6 trades, each of $100, you have lost $600. Okay, that will be your minus. Now, let us say you first 6 trades you take is 6 losses straight on the row, 6 losses in the row in that 1 week. Okay, or in that week, and you lost $600. Okay, but imagine if you only win 4 of those trades, 4, right? You make $1,200, and that, minus the losses, you have made $600 in the week. That's why you need risk reward, okay? 1 to 3 risk reward. So those risk reward will help you to maintain consistent in the market, okay? It helps you to maintain consistency in the market. So again, if you lose 6 trades, okay, you lose 6 trades, you've been trading 6 times, and every time was a loss, and you lost $600, which represents 1%, okay, and then you only win 4, right? You only win 4 trades. You out of 300 means you made free, as well, literally, you made 3%, which is £300, or the $300 equals 4 trades, is $1,200, and then you do your calculations, and then the weekly profit for the week will be will be $600. Okay, this is the simple fact. Okay, so now let's take the state a little bit higher. Let us say you do what you're gonna do, and you do best. Okay, so now let's take a 1 to 4 risk reward. Okay, so now let us say you take a 1 to 4 risk reward, the same scenario. You lose 60% of your trades, 60%. Okay, you lose 60% of your trades here. Like I said, 60% losses, and then you have 40% wins. Okay, and now 6% losses. Let us say you lose $300 of each trade, $300 each trade. Okay, and then you have 6 losses. So 6 losses each trade is of $300. That makes $1,800. Okay, $1,800. So now imagine you win again 4 trades only, yeah, and those 4 trades equals 1,200, and then you're gonna make 4,800 in a week, okay, and then the overall profit will be all of a sudden $3,000. Okay, that's how you need to see how trading works. Okay, because one loss equals 1%. Okay, and then what it means, you lost 1% of $300. Yeah, it's 1%, but then you made 4%, which is 4%, which is 1,200. Okay, 3 times 4 is what? 1,000 is 12. Okay, which is 1,200. Okay, that is gonna be your profit. So you win 300, as you risk 300. Okay, let us say here you risk 300 here. You risk 300. That's your risk, and then that is your gain, which is 1,200. Okay, what you're trying to make is 1,200. So, and this is 1 to 4 risk reward. Okay, so that is your losses, 1%. But if you, let us say you don't, this is what you're willing to risk, you're not making that money, you actually make the money back, and then boom, you make £1,200. You're not losing that 1%. But let's imagine you lose like this 1%, this 300 times, like 6 times in a row, and then you lost 1,800 in just, your whole trading week. So all you need to know is like, you know what, I need only to make 4 trades, right, to make the money back. Okay, not only I'm making money back, I'm also gonna be in profit. So if you make 4 trades right, so in total you have 10 trades, you take 10 trades in totals. Out of those 10 trades, 6 are wrong and 4 are only right, but you're still gonna be ending up in profit of $3,000. Am I making sense? Okay, that is the power of risk reward. Number 2 point, you've noticed that I've seen 1% and 4%. If you start thinking about money, 1,000, 3,000, or whatever, your psychology is not going to be so good in order for you to deal with the market. So every time if you start trading, you need to think from the 1% perspective. There's also 1% strategy where you say, okay, I'll only risk 1% of each trade. you're not going to risk anything more, only 1%, because the 1% gives you a better understanding of, okay, you know what, I only lost 1%, 2%, 3%, but those percentages is actually, one, 1,200 or whatever, and that is what it actually means, and it gives you a little bit an ease and how to deal with the money. If you see the money from the perspective of, okay, 1,000, 4,000, 6,000, 7,000, then it will become very hard for your psychology to deal with the losses. But if you see as a percentage, you'll be able to deal with the losses. You can stay in the trade for a little bit longer, and you can take more risk, because that is how it works with trading. Okay, so I'm just giving you some real life example for my charts. You can see what I have done so far. So I've taken some few gold trades. Go here, and then you can see the risk I've been taking, and then how many losses I had and how many gains I had. All right. So you can see, like, I have some few from last week. I have some few trades I've been in. Okay. Which I've predicted. Boom. That one is a gold trade as well. So I entered here somewhere. It didn't take me out, and then I was able to make. That was the risk was 1 to 4 risk reward was 4%, so 4,000 something like here. I took the money out somewhere here. I took the money out here somewhere, and then it was like 1 to 3.6 reward. So 3%. I make 3% in that trade. Okay, that could be 300, 3,000, but yeah, I was 3,000 in that trade. Okay, that was 3%. I made 3,975 something. Then I had another trade I took, which was here, was another gold trade, where I entered nicely, and it was also again another 3% I made. Okay, these are all live trading examples. How I trade is another 3% I made. Then is another gold trade. Then I took another trade here, and then I think I made another 3% here, and then this one is still in a run. I haven't taken the money out yet. I'm still in it and just see how it goes. So I can take the money out now if I want to, because I can see there's something happening, but I'm not going to do it now. Just no risk, no fun. And then yeah, that's what I do with gold. Okay, so I have another Bitcoin trade which I took last week. Some few Bitcoins. Bitcoin, I took this one. Yeah, I lost that trade. I lost this one, which is you can see I got taken out. It's like I lost 1% here. That could have been 4% trade. Then I entered here nicely. I didn't lose it, and it just started dropping. And so far, I am in profit. So far, I'm in profit. I haven't taken the trade out. Like, so far, I'm in profit. Hold on. I need to quickly. Okay, no, it's long. So far, I'm in profit. So let us see how far I'm in profit. So you can take partial profits out. You can, long, short here and there, boom, boom, boom. And I'm in profit now. So I am right now 1 to 4 risk reward. Yeah, 1 to 4 risk reward in profit. I was here initially. There's 1 to 5, so I can take the money out if I feel like I don't want to. So, but I take partial profits out. Then I try to re-enter here again. Yeah, but I got taken out. Initially, I was in profit a little bit. As you can see, here I was in profit a little bit. There was what is it? I was in profit like what 2%. Okay, but I didn't take it, and then I got taken out here, as you can see. Got taken out here. So this is the gold trade. So now let's calculate together how much profit I made within now 2 weeks. Okay, so I'm already made like 4%. Okay, I have one loss. So I have one loss so far, and 1% is gone in a gold and in a crypto trade. It's a 1% loss, and I make 4% already. So okay, so I'm a 3% in profit. That's a 3% I made, yeah, during the week. Then the gold is the same way. Gold is 3% plus another 3% is 6. Okay, and then I have another 9, and then this one is also like, yeah, 9.5. Like, yeah, so also like 1 to 1 risk reward. So 1%. Okay, so far I've been in profit. I've been 6, 9, 10, 12% for the week. You know, that's just, the money I've been making, 12%, just based on those ideas. And risk reward is very important because you're gonna be taken out, and you're not all the time right in your trading, and that's just part of trading. That's just part of the game. This one is just my example. I haven't traded that yet, but I also initially was in profit here, and I could have taken the money out here. And again, this is DXY, so you can't trade DXY, but this is what I'm doing. Then I have a US 30 as well. Had a profit in, went in here, came all the way up, and didn't take me out as a 2.8%. And yeah, so on and so forth. So that's another Bitcoin dropped here. Then I have another here, made money there as well. Had a reversal here and then went all the way up, but I took the money out here. So you can see that trading in general is very lucrative. The risk reward has to be on point. I just, guys, showed you like real life example of risk reward and how to trade properly. And so as long as you have the risk reward right, you don't need to be all the time right in regards to trading and what you guys do and etc. And yeah, that's it. So I hope you was able to learn something, and yeah, hope to hear from you guys soon. And yeah, man, over and up, and thank you for your time, and keep learning, keep studying. Bye.